Tuesday, May 13th, market analysis. Stan Ehrlich, good morning. 10:06 California time, a little after the middle of the trading day. We start out with stock market indexes. We go to futures, and currently I've had 4 different stocks that I'm tracking. We continue to see more strength after, of course, tariff talk. This is another set of new highs, but not in all the indexes, most. And what we've done is now reached the highest levels that I had expected or talked about, and not necessarily expected, but here we are, going back approximately a month or a few weeks, and we're overbought second day, and we left the gap, in some cases a rather large one, behind yesterday, Monday, when it gapped up over the weekend because of the news. This is not a price level that I would want to buy. This is a price level to be very, very cautious and covenant of your profits if you're long, and careful about getting out of any shorts because it could turn around at any point and start to head south. And I have to say, rather substantially, closing the gap at a minimum on the E-mini, 57.15. And probably lower, because the resistance area that we are now testing right about these prices and the high of the day and the last almost is fairly profound. Let's look at the 1-minute chart. Okay, little minor double top, tiny, doesn't mean much. But if it starts to dribble off below 59.05, and in particular below 58.96, I would raise an eyebrow. But even though it did some of that yesterday, or late yesterday afternoon, the beginning of this session, it didn't lead to anything big, and we have a new highs again. So there's nothing here, even on a short-term basis, that I could point out that it's the beginning of the move down, which I do think is likely sometime very, very soon. Next chart. Almost gapped up again today on the spider, not quite high and last, and generally speaking, in a broad resistance area all the way to the double or triple tops, which is all the way up to approximately 611, 612. Here we are, 588. And a lot of previous trading range since November, December, January, February. We're a little bit above the resistance lines in zone that I drew in. But there's that big gap to close down to last Friday's high on all of the indexes. That would be my first and minimum downside expectation when this starts to turn for real. And again, just because it's high and last at the moment, I still have to say at any moment, could be a surprise, we could turn down. The 1-minute chart definitely looks like it could make new highs and real soon. It's right up there right now. QQQ does have a second gap. It's awfully small between today's low and the high of yesterday, plus the one over the weekend, which is huge. And it is, generally speaking, in a broad area of resistance also. So I have to make the same comments. Any moment this whole thing could turn around, but not yet. And if you're long, I would just raise protective sell stops under the market. If you're short, obviously you have to have some kind of risk management involved. That's about the best I can say at the moment. I think it's going to turn very soon. New high and last in the last several minutes in the QQQ. The NASDAQ, same story. Right up against, or maybe even a little higher, major previous important rally highs, and a variety of lows in the trading range time frame. Okay, dipping down just a hair here, but gosh, nothing bearish. What about the Russell? That's a YM, I'm sorry. The Dow, a different story. It stopped right at my resistance levels yesterday and couldn't make a new high at all so far today, and is lower on the day by a modest amount. there is the same gap to close between last Friday's high and Monday's low. That would be my minimum expectation on the downside. And then there's various support levels after that. So let's see if we can get something slipping here. And the others might follow or even kind of push it if they turn around. So I need a break below 42,214. And then we should start to cascade below 42,180. And again, obviously below 42,084, et cetera, in order to get this thing to come down to at least 41,622 to close the gap over the weekend. Next. I forgot to draw on the gap here. I'll do that right now. Over the weekend for the Russell Index. And there it is right there. Good. So, no new high. Closed in a resistance area. Basically stopped at the high or a little bit above the resistance area. Today, at the moment, we're up a little, not much, but kind of getting stuck in this resistance area. Let's see if it'll roll back down to close the gap and lower. All right. No new highs. Having a little trouble, but it's not making any significant lower lows than anything more than minutes to an hour or two earlier. So it really doesn't matter too much so far. Now, bonds. We do have a new low again for this move down. We've reached a little bit of support at 112.21 because of previous lows. It's not great. I didn't even draw a line in there. I think it could still work a little lower, but we're very close to oversold, and we're very close to previous important lows. I think we're getting very close to a low, period. It might be around 111, 22-ish. Wouldn't surprise me. This week, 10-year notes, slightly below yesterday's low, has a small gap to close on the 10-year notes, and it is between the low of Friday and the high of yesterday, Monday, to go back up and close. So minimum amount of rally, 110.24. But I expect it'll be a lot more than that. It's not oversold. It's very close. And if we have a turn back up, I'd like that very much. Remember, the long-term picture, both in bonds and notes, is the likelihood or good possibility, in my opinion, that we have a very broad year-and-a-half double bottom formation that is still trying to get high enough to break out and start a longer-term bull trend. But that's, way up, pretty much 116-ish, something like that. Now, crude oil. We had a buy signal just a couple of days ago, May 8th. Next day up, yesterday up, today up a lot. Not overbought yet and not at the top of the resistance area, so I'm looking for 64.65 on this push. And that means our buy signal worked outstandingly well. Very, very good. I should put a circle around it. I will. It brings it, it highlights it visually better. And this buy signal at the bottom of the market also worked great. So, I'm looking for a little bit more, but we're so close to overbought, you can't expect a lot. And it looks like 64, 67-ish. Could give us some trouble. Next, also a buy signal on May 8th. Next day, last Friday up, Monday up, today up even more, and we are able to get above yesterday's high. Plus, that high yesterday was the top of a resistance area that we have now climbed above and seem to be staying above. That allows for the next move up to approximately 2.29, a previous rally high. Right there would be my next minimum upside objective. But I have to point out that we're awfully close to overbought, and that is a chunk of a move still. So I think we're going to have a little ABC zigzag on the way up to 2.3 because of it getting overbought. It's possible I could just run right to it and get quite overbought. But the buy signal is working great. Obviously, plenty of room now to protect the profit, whatever you wish to use as a trailing stop. My stops I'm not showing you because I don't want to go that far with these kinds of videos. Next. We have an outside down day yesterday in natural gas. We did make a low today lower than yesterday's low. Right now, it's approximately unchanged, up a few ticks. I think, and I've got these markings on my screen for the first time today, the price is almost dead correct. The high yesterday at 3.836. Well, I'm going to just get exact on this one. 3.84 exactly was almost the same high as 3.87 on January 13th of 25. Not only that, but the amount of time between the first shoulder and the highest high, the head of the formation, yes, it could be a head and shoulder top. The amount of time is almost exactly the right amount of time. This, I think, was 2, maybe 3 days, a little bit further to the right than you would have measured. But that's super close, and the price is just super, super accurate. This is an excellent example of a last shoulder high. Yesterday, when I mentioned the bearish engulfing progress, it's too bad we weren't overbought. We were pretty close. If that had been overbought, that would have been a red bearish engulfing sell signal, which would have been great. And I would be a little more confident about the comments I'm making, but I can't help it. It looks just right. The neckline is down approximately 2 point, a little below 3. Yeah, a little below 3. And the minimum downside objective for this pattern is quite substantial, all the way down to below 1, a little below 1. That's a very, very large percentage move and pretty big. I can't help but think that that seems to be awful low and maybe too low realistically, but I have to point out that that's what it says. So a word of caution about the downside objective of 1. Next chart, gold. Okay, we challenged support again yesterday. Today's a doji, up a little. Uncertainty. I think it's about to break below a minor level of support here, my little line I drew in. The next downside objective is a hair under 3,000. Next. Silver popped up a little bit, now back below yesterday's high. Yesterday was a bearish engulfing, but that didn't work. Sometimes it don't work. It is still in the trading range, which is a resistance level, because we came into it from below and then turned into a little bit of support because you came down into it again. And then we stopped at the top of it and we stopped at the bottom of it, and here we are in the middle. That's about it. Not going to say one thing or another at the moment. I do favor the downside a bit. I needed a downside breakout to get a chunk more bearish. Next, platinum, doji, middle of yesterday's range. Nothing to say here. We're between a rock and a hard spot again. Major support below 950. Major resistance above 1060. Lately been moving its way up kind of sloppy and slowly. So I'll go with that. Up sloppy and slowly. Next, high grade. A little strength. Again, not much happening here in the metals at the moment. We've got between a variety of resistance levels, and we've got some support below the market that's doing a decent job of holding it so far on that last break. I favor slightly higher for the moment, but I just don't have a strong handle on this. Love the buy signal at the bottom. Next, grains. Now here we have some real interesting, brand new, huge soybean oil developments. First of all, soybeans. Looks like it's about to make another new high, at least another new high close. We're not overbought. There's room to have a pop-up market here all of a sudden and get close to the neckline maybe. I don't know what's driving it. I'm not a fundamentalist or fundamentalist, so I have no idea. My guess might be weather. or politics with grain shipments or something. But it looks like it's about to pop. I love it because it's now beginning to reinforce intermediate to longer term the head and shoulder bottom formation in soybeans. This is very, very bullish long term. My objective is approximately 1240. The neckline again is right around a little over 11.7. Next, soybean oil is breaking out. This is a long-term bullish breakout for soybean oil I have been talking about for months and months. This is a double shoulder, head and shoulder bottom formation. They're fairly rare. And the size of it being very large, the depth is very adequate. The neckline is slightly upward slanted. If we close today, and I'm crossing my fingers we will, above approximately 5120, and we're 5172 last tick, high and last pretty much. Looks great. Large upside day, probable heavy volume. On the breakout day, I told you what to look for. It's exactly what I told you to look for yesterday, and maybe even the day before. There's nothing wrong with this as far as I can tell. New high for months. That's it. What can I say? We're probably going to move up to, I would guess, 53.60 or very close on this first leg up. But there'll be a little top coming soon. Remember, we're extremely close to overbought, which is not unusual on these kinds of breakouts on the upside. You just get another day or two up. Get overbought. Now, we're not supposed to come down below or trading below at all the neckline as time passes. And then you have to watch that neckline for the next few weeks. So you get a rally high, overbought, typical. Retrace back to the neckline or maybe only halfway back down to the neckline. And then another set of new highs would be outstanding, exactly what these chart patterns tend to do historically. Head and shoulder patterns are my favorite. I've seen thousands of them. Next, an outside trading range day in soybean meal, but it's not bullish at all. In fact, we're not even close to overbought or oversold one way or the other. And this is just almost the exact opposite of soybean oil and beans at the cost of meal, maybe. Yeah, at the cost of meal. So this looks like we could be close to a new low, close to the move down, and extremely close to new lows for the whole bear market trend for years, for a very, very long period of time. Again, what is this? Back to October of 22, approximately. Well, no, okay. There's a good bullish one right smack at the low on that one. Yeah, October of 22. Exactly. We're very close to those lows. Wow. So if we get some kind of a gigantic bullish engulfing or bullish green ER buy signal soon, that would be great. But you got to drop fast and hard first to get oversold. Then I got to get the green. So I don't know. This looks like it's going to hit new lows. What can I say? Corn is doing it already. The head and shoulder bottom in corn, I'm just going to have to abandon the idea. These double bottom lows work partially, not completely. Never did get to its minimum upside objective, which was measured here. Did get to some resistance, overbought and turned down, but I didn't expect it to make new lows like it has. The only thing I can say is corn should turn up. It hit a support level. It is not anywhere near close to its lows, and it may not close below the previous dip lows we saw just a couple of days ago. So I think there's a chance it could bounce. But we really don't have a very good start so far. It kind of depends upon the close and can we get more strength out of this before the bell. I don't know. But the head and shoulder pattern I was talking about before seems to have lost its luster. We just should not have had approximately the last 5, 6 days, even 7 days, That was the killer right there, that big down day, May 5th. And then it continued. That was not good for this pattern anyway. Okay, so still looking for a turn in corn, but it's going to have some different commentary coming. Wheat, new lows completely for years. Boy, oh boy. All I can say, it got oversold again. Could make a big turn maybe. We might see another green bullish engulfing now within the next few days because it's oversold today. That's what I'll be watching for. And around these price levels or a little lower. Cattle. We've now shifted to the August. The gap up tried to get closed. Today's low is right at yesterday's low, almost closing the gap. Didn't do the job. It's overbought. Looking for bearish engulfing red signals. Don't have any yet. I think it's in the process of topping out because of the upside possible exhaustion gap and a doji so far today. I just love to see a jab up for a minor higher high than the previous day, and then all of a sudden a collapse to below the low of the previous day for a bearish engulfing. It would turn red for a good sell signal. I hope good. Hogs, outside up day at the moment, off of a support area. This is looking particularly good because it's combined with support areas. So I'm liking this bullish engulfing. It's not super powerful, but it's a bullish engulfing. Let's see how we can handle this resistance area that we got to get to. First, it came very close. And then if we can clear that on the upside, I would expect this old gap to get closed way up here at around, 105 and a quarter-ish. But we got to clear this resistance and, of course, this previous high, which was a really good bearish engulfing red ER sell signal. Okay, let's look at the first stock, Shell. New high close, starting to close the gap that we've talked about. Now, don't forget, there's a gap down here, but it looks like it's going to go by the wayside for a while because it looks as if we're going to get to this gap closure on the rally first at 69.65. And maybe all the way up to 71.86, where there's another gap. I'll stretch this over to the far right, and that's about good right there. I could draw in this one also, but not too much point of it at the moment. This is looking good. Next, we've got Apple. That may have had a head and shoulder bottom. I have left my measurements here. That's the low right there for the first shoulder low, and I'll draw in my classic typical markers here, and I'll make a couple of copies real quick so that I'm marking the first shoulder low and now the head of the formation and now the last shoulder low right there. So the timing from the lowest low for the first shoulder to the lowest low, period, the head of the formation, is this yellow line. So I have duplicated already for you, and we've got two of them, so now I don't need the one. It shoulda, woulda, could have been only 2 days earlier than it has been, which was on May 7th. The exact date shoulda, coulda, would have been May 5th. I'm going to erase the timing line now. So that time is really good. Only 2 days off. That's pretty damn good. Also, the price level, although it's not exactly where the previous low was, it's oftentimes, more often than not, at a different level, and the neckline slants down, so this shoulder is lower also. Sometimes I've done this, see if the slope from the shoulder to the shoulder is the same as the slope of the neckline, and it didn't work out. It usually doesn't, but sometimes it's interesting. The important thing is we're crossing the neckline today. It's not very aggressive. I kind of would have expected a lot more strength here, a lot more of a push, which we might just get out of Apple. There could be a bunch of buy stops here at about 215-ish. I would expect there would be. But at the same time, it's where it topped out before, and that's still a few dollars higher, $3, which is not that much on a $211 stock. And we're not overbought, not even that close. There's a chance this thing could pop up a bit all of a sudden. But the important thing is it is breaking out, although not particularly classically at the moment, of the neckline of the head and shoulder bottom formation, which has a minimum upside objective of 262. Let's see what happens. We have a very strong rally again in Tesla. We have now reached one of my objectives on the upside, another resistance level, and we left a gap behind over the weekend. Don't forget about that. And a gap even lower than that, back down around 278. And one that I think I'm going to start to ignore, but not quite yet, at 243.44 or something. So, overbought, second day in a row, very vulnerable to a downside correction. I'm not saying a bear market or a bear move or anything like that. Just a technical downside correction would be great to close some of these gaps. Watch out. And what do we got for Carvana? We have a new high also for Carvana. Now, it's overbought. You know, I don't trust rallies once you get an overbought position. Although sometimes they can be very substantial, they usually don't last very long and they're pretty tricky to handle. You got to be quick on your feet or on your toes. So now we do still have a possible broad double top, but this is now a higher high. If it closes below the old high a couple of days ago, last Thursday, that could be the beginning of something bearish for the moment, but it's not doing it yet. We're still here. This is the marker I put in a couple of days ago when it started to dip down. So now, if I raise the whole thing up, that would be legitimate, and we'll move it to the right a little bit. I can't say it's going to work because it's not stopping. I don't see any evidence that it's going to top out yet, except it's overbought. Watch for sell signals. Don't get too dramatically enthusiastic at the moment. You'll probably get a chance to buy it here or even a little lower soon anyway. I wouldn't chase it up, put it that way. Now, if you're short, that's a different story. What's your threshold of pain? Let's go with the E-mini again real quick. Well, we're still there, and we're still climbing, it looks like. Up, yep, look at that. Last few minutes, new highs, popping up. But I continue to say the same thing. You have a great day and profitable trading to you.